Tabernet Talks, here we go again. We're back for a Q&A show here. It's been a while, right? It's been a long summer. It feels like, we just went through a year since I've done a last episode. So I wanted to get back on and really get you guys going for the fall season. We're into September. It feels like it's 40 degrees outside this morning, and we're still in summertime. But we're ready to roll, right? The things have picked up. I think it's a crucial time that I bring you the information that you guys need in order to navigate to the end of the year. As we go into the fourth quarter, I think that, and I've been saying it all year, interest rates have come down. They're continuing to come down. So I want to make sure that, you are prepared for what's about to happen. Because what I think what's about to happen is we're going to see a 0.5 point cut from the Fed. I know I'm being aggressive by saying that, and then everybody's thinking maybe it's only going to be a 0.25 point cut coming up next week or on the 17th or the 18th of September. But I think the numbers are really bad in the job market. The job market has dictated, where we've been, over the last few weeks in interest rates. The numbers have been revised. Things are not as jolly and happy as they've been saying all year. I think that we are heading into recession. I hate to say that, or if we're not already in one. And I think the Fed is way behind the 8 ball right now on cutting rates. They probably should have started cutting them through the summer, and we would have probably been in a little bit of a better situation than we are right now. Right now their backs are against the wall, and they're probably saying to themselves, we have to cut at least a 0.5 point in order to get things going. And then I think another 0.25 point or another 0.5 point by the end of the year. So that's 1 point in cuts, and that's pretty crazy, that I'm saying that. But didn't I say the election, right? Everything gets good and jolly when the election comes. Everything looks great. Let's put the interest rates down, and I think that's exactly what's going to happen. That's just my bold prediction. Now, again, you don't have to take 100% of what I'm saying here because I don't know 100% what's going to happen. But I think that after doing this for so long and reading the reports every day and seeing what's going on behind the scenes, we are in for a pretty big cut. So hang in there. The refinances are coming. I have a lot of stuff to touch on today. So I'm going to roll pretty quick. I always say, stop me if you want to stop me, but no one's here to stop me. So I'm just going to keep going. All right. So, try to follow along. I think that there's a lot going on in the industry as far as refinancing. Okay. So refinancing. Look out right now, right? The servicers, the people that have your mortgage right now are going to be calling you. They're going to be reaching out to you saying, do you want to refinance? They're going to be giving ridiculous offers, low rates that don't even sound normal. They're going to send you mailers. They're going to send you postcards and say, the rates are 3% or 4% or whatever it is, right? It's a come on to get you to call them. I need you to look out. Go back to your original loan officer who did your mortgage and see if they have the opportunity of doing the deal the legit way, right? Where they're not lying to you, where they want to, especially a local lender who's taken you from the beginning to the end to buy the house. Those are the people that you want to go back to and give the opportunity to refinance. Those are the people that are not sitting behind a desk somewhere in another state, or you're talking to an AI computer and you don't even know who they are. And they're just saying, we're going to give you this interest rate and refinance you. It's scary because a lot of people are falling into these traps and they're thinking, oh, well, my servicer is giving me this and they're giving me that. And then they wind up going into processing with the servicer. And here we go. They can't close you. There's a lot of fees that pop up, points, discount points. They're charging you thousands and thousands of dollars to refinance, and you don't even know what's going on because you just like what the payment is. Your local lender is going to save you a couple $100 on refinancing also, but the difference is they're not going to charge you $5,000, $10,000, $15,000 in points in order to do the deal. Okay, so look out because these servicers are out for blood. They want to knock guys out like me, right? They don't want us to retain our customers back. They want to retain what they have, and they want to make a lot of money doing it. And I think that's really scary, especially if you're a first-time buyer and you just bought over the last year. You have a rate of 7% or 7.5%. It's your first time ever refinancing, and you're just going blindly by the servicer who took over your loan. Watch out, okay? I see another big thing happening. Anthony on my team is doing a lot of them. Home equity loans, lines of credit. Okay. For people with good credit scores or even great credit scores are getting the best deals out there on home equity loans. They don't want to get rid of their 2% or 3% interest rates, which I understand, right? If you have a 3% interest rate, it's very tough to refinance to 6%. It's even tough to refinance to 5%. Like you're going to have your loan officer gurus out there to say, oh, well, it's okay to go from 3 to 5. It is okay sometimes, but you could also look into a home equity loan or a line of credit where the rates, if you have, good credit scores, you might get a really good deal on a home equity loan where you don't have to touch your primary interest rate. So, just pay attention to your options is what I'm trying to say. There's too many people that are steering people into one thing or they're steering people into another thing. They're not giving them options. They're not even telling them that they can do a cash out refinance or they can do a home equity loan or a line of credit. It's terrible. I mean, it's in the world that we're in. People are just out to make a quick buck and quick slam, and let's just close the deal and let's make a quick couple $1,000s off these people. They don't care. What happened to retention? What happened to I want to do this guy's loan again when he comes to refinance for a second time down the road if he needs money? What happened to, oh, well, the guy is going to buy another house down the road and then I want to do that loan. That guy's going to buy a second home or he's going to buy a vacation property or an investment property. Don't you want to retain that client? No. A lot of these loan officers are one and done or companies are one and done, and you shouldn't be that way. Listen, my phone was ringing off the hook yesterday. Why was it ringing off the hook? Because all of my past clients are calling me. That's how I've lived through this market this year. If you don't have a book of business or you don't have a good mentor to take you through a market like this, you're not going to make it. And the reason why I have a book of business or a reason why I have younger loan officers that want to work with me is because I took care of a lot of the people in the past that came back to me now. Like yesterday, I'm getting phone calls from people that are buying a home in Ocean City. I'm getting calls from people that are buying homes in Delaware that I did their loan 6 months ago, 2 years ago, 1 year ago. Ask Anthony. We got people coming back 5, 10 years ago. I don't even remember their names, which is terrible that I don't even know my own database sometimes. But they're coming back to me and they're saying, I want to buy another house. I want to refi. I want to do a cash out refi. Like these are the people that we took care of over the last 20 years and they're coming back. And don't burn your bridges, right? Retain your clients, retain your customers. They'll come back to you if you take care of them, and they'll keep coming back to you, and they'll send their family, they'll send their friends, they'll send their whole neighborhood to you if you just take care of them up front. Okay. So that's a big one that I needed to get out there because I just see too many people getting robbed and too many people just being forced into things that they don't need. Why? It's like you go to an auto dealer or an auto mechanic shop and they tell you that you need a new engine when you don't. You don't need a new engine, right? You just need an oil change. It's ridiculous. And here we go. I need new brakes. You need new brakes? You just bought the car 4,000 miles ago. Why would we need new brakes? Maybe you just need new pads, right? So these are things that you got to trust the person that you're going to in order to feel good about what you're doing. So that's that. I asked Anthony to help compile a list of things that me and him are running into to help me out today because there's so many things that I'm seeing day in and day out that I think, it's tough for me to write them all down, right? Because I get busy and then I forget. So, a big one is using your credit cards during the month of processing. Too many people were using them before closing. Don't use your credit cards while you're in process. And I've said this before on this podcast. I've said it with many realtors who have sat with me week in and week out. Don't use your credit cards while in processing for a mortgage. Okay. Stop. You're going to kill your deal. And we can't do anything about it because you don't qualify then. You're jeopardizing the house that you wanted because you're using your credit cards. Please. It's going to kill you. You're going to get a phone call the week of closing from a guy like me or Anthony or even my processor, and we're going to tell you that you don't qualify anymore. You know why we're going to tell you don't qualify anymore? Because you used your credit cards, and we were telling you not to. The best people that I like, the clients that I like clients who come to me or call me and say, hey, Alex, I'm going to use my credit card this week. Is it okay? Is it okay that I go and buy this? Is it okay that I purchase this? Those type of people care. right? And I wrote this down too. There's a type of, and I did a post on this on Facebook too. There's the type of people who care about closing, and there's the type of people who don't care about closing. Even though you go under contract, doesn't mean you actually care about closing, right? You could tell the aggressive people are like, I'll get you everything you need. You need documents? I'm getting them for you right now. You need W-2s? You need pay stubs? I'll get them for you today. You need bank statements? I can't get them for you today because I'm busy. I'll have them for you tomorrow. Those are the people that I like. The people that are saying, I have to go buy a car because my car broke down X, but do I still qualify before I go do that because I know I'm in process to buy a house? Boom. Good. I love it. Yes. I'll work with you. I'll structure the deal with you. I'll make sure you still close. Go buy the car. You still qualify to buy the house. Go, do what you got to do. Okay. What I don't like, what I think no loan officer likes is you switch jobs and you don't tell us. You go and buy a car and you don't tell us. You think you can sneak it through, right? You think we're not going to find out. And I'm being a little harsh here because it's so bad what I'm seeing. Like people are switching jobs and they're not telling us in the middle of the process. You're dead, right? If we find out you got a new job and you're making less money than you were making at the previous job, you don't qualify anymore, and we're going to find out. Your car broke down. You went and bought a new one. You didn't tell us. We find out. My processor runs your credit report the week of closing. Before closing, you don't even know we do because we do a credit refresh behind the scenes. And then we find out you bought this car and you don't qualify anymore. You got to let us know up front. A lot of people are like, oh, well, you know what? It is what it is. Oh, well, I'm not going to do anything about it. Oh, well, I can't get my pay stubs or my W-2s. I can't find them. I guess I just don't get the mortgage. Oh, well, I switched jobs and, I'm making less money, but oh, well, what are you going to do about it? Oh, well, that means you didn't want the house to begin with, right? Because if you got to have a little fight. Listen, if I'm getting going in the trenches every day and getting my feet and hands dirty to get your deal closed, you better get into the trenches with me and fight to get the deal yourself. Fight to get the house yourself. I'm fighting for you. Why can't you fight with me? Right? Is what I'm trying to say. Everybody's got to be on board. The best realtors that I see that I work with, which I have a lot coming up in the fall season here, you're going to see them, some heavy hitters. They're the guys that get on the front line with me. We fight to get the client to closing. It's a team effort, back and forth. I'll get this, you get that. You call them, I'll call them. Let's do a conference call. Let's call their work for them. Let's figure out the deal. Let's get the underwriter on the phone. Like that's the best things that are going on, and the client is involved too. Alex, I'll get you the pay stubs. I can't get in my job saying this. Can you jump on the phone with me and help me talk to my HR department with me? Maybe you can you tell them what you need. Like that's what we need, guys. We can tell when you really want to buy a house, and we can tell when you went under contract and you're getting cold feet, or you really never did want to buy the house because you're like fighting us instead of working with us to get into the house. That's my spiel there on that. You can you can take it or leave it on a grain of salt. I wrote down here, getting us your tax returns up front. You're self-employed. We need your tax returns up front. Stop going to lenders who say, okay, I'll get you a pre-approval letter and we'll make an offer today and I'll get your tax returns later. You're self-employed. We got to see your tax returns up front. Get your documents in order. If you know you're going to buy a house in a year from now, and I'm talking about a year, start getting your stuff in order now. If you know you're going to buy a house in a month from now, you should already have your stuff in order. All your tax returns, your W-2s, whatever else, your profit and loss if you're self-employed. You need to know that you got to get your stuff in order up front. And then you should give it to your loan officer. You know what a red flag is? A red flag is if a loan officer calls you and says you're approved and you say, great, I never sent you any paperwork and I'm self-employed. You don't need my tax returns. You don't need to see my profit and loss. You don't need to talk to my accountant. You don't need to see anything. I'm approved. That's a red flag. Now, if you're a W-2 employee and you're straight salary and, hey, listen, maybe we can work with you because we know you're guaranteed that salary. We could do a verification of employment directly with your job and we'll get the information that we need. But if you're self-employed, they got to ask for that stuff up front, man. And they have to verify that stuff up front. And then they give you the approval letter. You got to wait a couple extra days. Wait a couple extra days to get the approval, but at least you can sleep at night knowing that you have the approval. So That's a big one there. You know, I think that we're seeing a lot of declines. Why are we seeing declined loans? Debt to income ratios are a big issue right now. A lot of people still don't qualify for the range that they want to go to. You are biting off a lot more than you can chew or swallow, right? Whatever that saying is. You are shooting for the stars when you shouldn't be. You have a champagne taste on a beer budget, right? So I'm like rattling off here because this is really what it is, right? You don't qualify. Like, stop buying a $600,000 house if you're only making a certain amount of money a year. I'm going to try to help you and try to get you qualified. But if we really don't think you should be buying it, you shouldn't be shopping other answers or shopping other companies and saying, oh, well, this guy told me that I'm approved and you're telling me I'm not. Yeah, well, they're telling you you're approved because they just want to tell you you're approved. Are you actually going to close is going to be the question. Who knows? Uh, shopping around for an interest rate the week before you close. Okay. Um, Here's the deal. I do a lot of pre-approvals with a lot of clients. You might be one of them that's watching this podcast. You've been pretty loyal to me. You give me all your pay stubs and your bank statements. We get you approved. You're out shopping. I'm constantly helping you on the weekend to send new approvals so that we can put in new offers. I'm calling the listing agent for you and telling the listing agent how solid of a buyer you are. I'm letting them know that I can close quick and Green Tree's local. I'm letting them know that whatever you need, I'm available on the weekend. Call me at nighttime. Text me. I help get the offer accepted for you. Me and the agent team up and we get the deal accepted for you. Okay. Um, then you go under contract and then we go 1 week into process. It goes through underwriting. Underwriting approves, gives you a commitment letter. Then you start shopping around for an interest rate and it's a week before closing. Why are we shopping? And then you want to go to another company because you feel that we're not giving you a good interest rate or we're not matching the rate that you need. Come on, guys. Stop shopping the week of closing. You had plenty of time to shop, right? The minute that you went under contract, you could have shopped, which was 3 weeks ago. Stop shopping the week of closing because if we don't match the rate and you're going to try to go to another lender, you're going to wind up delaying the closing because the other lender's not going to close you in a week. Most 99% are not, even though they might tell you they won't, right? So now you're jeopardizing delaying the closing. They're giving you some crazy interest rate that's not even on the market. So of course you want to go with them, right? No one can match it. And so now you're willing to delay the whole closing and upset everybody. You upset the seller, you upset the listing agent, you upset your buyer's agent. Don't do this stuff. All right. Do me a favor. Shop when you go under contract. And then if we can't match it, then at least you got 30 days to go through process with the other lender and close on time and everybody's happy and no one's frantic the week of closing. And give the decency, if you do go under contract, to tell your loan officer that you're getting a better deal. Okay. Too many times we go under contract and I find out the client went with another lender. The minute we went under contract, we helped them get an accepted offer. And now they go with another lender out of nowhere. Give us the opportunity to know what you're getting. Maybe we can match or beat it. But if we don't know that you're shopping around or going to another lender the minute you go under contract, we don't know anything. We're just in the dark. Next thing we know, you're gone. And your realtor calls us and tells us, we're sorry, Alex, but they won't. How did I know they were shopping? Maybe I could have beat it. Maybe I could have gave them a better deal. So don't burn your bridges just because somebody's giving you a lower rate, because sometimes, or a lot of the times, they're not giving you that interest rate that you think that they're giving you. They're telling you what you want to hear up front until you go into process. And then once you go into process, they're all of a sudden, you're going, they're calling you the week of closing saying, you know what, I can't honor that interest rate anymore because of this. You got to go with a higher rate. We can't approve you anymore, and we got to give you a higher interest rate. Like, it's a bait and switch. Bait and switch is 2008 market that I was in, and I saw tons of bait and switches. You don't want to be that guy that gets the phone call the week of closing to say that we can't give you the interest rate that we promised you because of some BS, condition that you didn't give us, or a BS guideline that popped up. And that's the difference between trust and not trusting the person that you're going through for your mortgage. This one goes out for mortgage guys and real estate agents that are working remote. And this goes, emotionally, it's tough right now. I work from home. primarily. I know most loan officers that work from home primarily. Real estate agents also. No one's going in offices anymore. Offices are desolate. You might catch some offices that have actually some people in them, but the majority of the businesses is completely remote. It's tough. It's tough to get motivated in the morning sometimes. I ask a lot of the or not loan officers, realtors that I have on there, what's your motivation? Like, what's your daily schedule? You got to get up in the morning and just do it. It's not easy some days to stay motivated. You should have some type of plan each night of what you're going to do the next day. I know I do. I write down as much as I can the night before on what I want to do the next day. I try to get Anthony a plan for himself, so that he knows what he's getting into the next day, so that know what type of marketing we have to do and who we have to reach out to. And you got to, there's just I just talked to a lot of people that feel lonely from working from home. Like, it seems like the loneliness is set in. Like, it was cool when the pandemic kicked in. Everybody's like, working from home, this is awesome. I can do my own thing. Now it seems like everybody is starting to really say to themselves, I can't take this anymore. I got to drive around just to get out of my house. I have to, I got to take a walk, and it's a shame because this business used to be hustling and bustling. Like, I used to go into the office, and loan officers were everywhere, and it was fun. And I'm not saying that it's not fun now. I'm trying to say that it's just a different world that we live in, and you're not the only one out there that's going through it. So this is for you guys that are thinking to yourself, "Oh, well, I'm at my wit's end, or I feel like I'm at the end of the rope, or I'm tired, and I don't talk to anybody all day, and it feels like there's nobody left in the business, and I wish it was fun like it was 3 or 4 years ago, and it's gonna get fun again." I've been through these waves of it felt like really bad one year, and then it got really good the next year, and this is just a really bad wave we've been in the last 2 years to 3 years since the pandemic. And I think in next year, 2025, I'm going to stay optimistic to say that, I think you'll start to see people rebound with the interest rates coming down. It'll start to get more fun again with, I think, maybe some returns to the office finally, maybe more meetings and more social gatherings. So I just want you to stick in there especially if you're a veteran. I see too many of those guys that are burned out completely, and they're ready to get out of the business, and they've made a good living. And I think that, times are going to get better for them too. So I wanted to throw that out there because it's really disheartening to hear some of these people that are ready to just throw in the towel, and it's a shame. So, all right. So in a challenging market, what are we doing to stay consistent? This gears not to clients, obviously, or not to people that are buying houses. If you're listening to this gears to loan officers and even realtors, and what I'm doing day in and day out. And this is what me and Anthony are preaching day in and day out on staying busy and get going. All right. So leverage social media is number one. Got to be alive on social media, right? Find a niche, right? We do multi-units. We do DSCR loans. We do 203Ks. We find a niche, right? Find something that you want to do. Find something that makes you happy, in this business, a certain program that you like to do, FHA loans, VA loans, USDA loans. There's so many different options. Become a master of that one product. Don't sell to people constantly. Educate them, right? Me and Anthony are constantly educating the real estate industry on what's going on out there and what we think you should do in order to get yourself to closing. No fake pitches. People can see right through you if you're fake pitching them and throwing out stuff that is not even relevant to their situation just so you can get a deal. It's crazy. Be available 7 days a week. No, not 24 hours a day, but 7 days a week. Somebody hits you with a phone call or a text message on a Sunday afternoon, respond to them. Saturday morning at 10 a.m., respond to them. Listen, my daughter plays volleyball. We just got the volleyball schedule. Lord help us, right? It's going to go from now until April because she goes from school volleyball to club, and it's weekends, it's weeknights. It's, I got to move around our schedules in order to get through it. But I'm still going to answer my phone. I'm still can answer a text message while I'm sitting in the bleachers. I might not answer her on the spot because I want to see her play. But on the flip side, you get breaks, right? So, they take breaks between matches. Respond to that text, respond to that email. Respond to the phone call real quick, the 30-second phone call that you can knock in and knock out if you know what you're doing. But be available. Don't just go MIA on the weekend because you have a life. We all have lives, So, again, my last one was be in the trenches, which I think everybody needs to. You're going to see the difference in this market of who's all in and who's all out. And I'm seeing, and I'm not going to name names because I would never do that on my show, but there's some loan officers out there that are not all in. And there's some realtors that are not all in. And then the ones that are all in because they're the ones that are responding. They're the ones that are doing their homework up front. And they're the ones that actually care if you close or not. And they're not in it just for a paycheck either. They're in it because they actually like what they're doing. Listen, if I didn't like what I was doing, I wouldn't be here 27 years later, right? So that's the truth. I mean, some days I don't like what I'm doing, right? You don't have a great day every day. I don't have a wonderful day every day and everything's peachy. But overall, I wake up in the morning and I say, let's get back to work. Let's do it again. Let's see who else we can help. Let's see who else I can maybe get approved that I couldn't approve in the past, and we revisit the file and we get them approved again. So those are my top consistent things that you should be doing in order to drive success. We're 6 of them there, and I hopefully you'll play this back and that'll give you an idea of what you need to do. So anyway, as we move on, I have a really good one that I wanted to point out. Seller concessions are coming back, guys. Seller concessions are coming back, okay? Redfin, which we all know who Redfin is, says that 42% of home sales last quarter involved sellers willing to help with seller concessions, okay? That's, up from last year at 25% overall for the year, okay? We're almost up 25% more than we were with sellers that are willing to give seller concessions to move their houses. You got to ask, though. No, not every deal. You might have multiple bids on a house and there's no way they're going to take its seller concession. But guess what? I'm seeing a lot more houses that are sitting on the market that are getting price adjustments that are not moving, and they are accepting seller concessions. Or they need to accept seller concessions to help the buyer close. You got to ask, right? And we got to structure it in our offers and ask. The homes are appraising to cover the seller concessions. Don't be so scared that it won't appraise. Take the shot, right? Don't lose the deal because they need $6,000. They're short $6,000. Ask for a seller concession to get the deal through. We're seeing a ton of them pop up, and if you're not utilizing those types of things, you'll have a loan officer out there or a lender who will utilize getting a seller concession for you because they'll put together a plan, and that plan will be, let's get a seller concession together and let's get going. Okay. So remember that because it's a big one. Okay. So I wrote down some mistakes, and this is good. Whether you be a first-time buyer, whether you just be an experienced buyer, a move-up buyer, whatever you may be, or you might just be looking to refinance or whatever. I wrote down 5 mistakes that, not mistakes, some of them are tips and then some of them are mistakes. So you follow along and take notes and again, play this back too. So know that closing costs are between 2 and 6% of the purchase price of the home. Always know that, right? There's going to be closing costs. I have too many people that say, I didn't know that there were closing costs involved. What do you mean? You're buying a house, you're refinancing. Of course, there's closing costs involved. It's usually 2 to 6% of the price of the home. Okay. So, if it's $300,000, it's 3% of the price of the home, it's $9,000. Okay. You got to say to yourself, just because I have $20,000 in my bank account, not all that can be used for the down payment. You need money for closing costs, and you got to get those numbers up front. And in Philly, where I'm at, in the city here, you probably need 6% of the purchase price of the home or close to it, maybe 5%, because there's transfer taxes here that are killer. You got the escrows, you got title fees, you got a lot going on in Philly. So 5 to 6% of the purchase price is not unheard of in the city because of the transfer tax. So look out. And if you are doing a deal and someone's not telling you that there's closing costs or not reminding you that you need a chunk of money for that, you could be in a bind once you go under contract. Okay. Also, Zillow is not accurate. Okay. So stop going on Zillow and find, Zillow is just not it's a problem. It's people are saying, oh, well, I'm going to go on Zillow and Zillow told me that my house is worth $500,000. Zillow is not accurate, guys. They're just not listen, they're a gauge, right? You can go on there and maybe gauge something, but they're not ever accurate. So stop going on Zillow and saying, well, I sold this house and I think it's worth 600,000. It's not. You can't believe everything that you read. Don't buy a car before you buy a house, right? We know that. Don't buy a car before you buy a house. Buy the house and then buy the car. All right. So that's pretty self-explanatory. I don't think I have to get too much into that. You can use your 401k or IRA for down payment and closing costs. That's it. I mean, it's plain and simple. 401k, you call your 401k company, ask them for a loan or against your own 401k. It's your own money. They'll give you a loan to buy a house. IRA, I want to go on my IRA. I want to take $10,000 out to buy a house. Do it. Like there's so many people that say, I don't have the money. And you do have the money. You just don't know you have the money. 401k or IRA, always tap into and see what you can get out of there to help close. Okay. Did you know that winter is the best time to get a deal, right? Everybody says, oh, let's go to the spring market. No, let's go to the summer market. Yeah, of course you're going to do that because you need to move during the spring or summer before the kids get into school maybe. It's warm out, so you don't want to. But if you really want a deal, like if you really want a deal on a house, right, and you want a deal on an interest rate even from a mortgage company, and you want a seller concession, and you want it all, you go shopping and buy a house in the winter. Because there's nobody buying houses in the winter. The smart people are buying houses in December, January, and February because they know the competition is nowhere near what it would be now. The inventory might not be the best, but the houses that are on the market in the wintertime are priced to sell, right? And they're going to move, and you can negotiate at that time of the year. I've had some of our busiest months be December, January, and February, and you'd be surprised. We were rolling. We were really busy. So if you want to get a deal, for real estate, December is the time, or winter is the time, even starting in October and November in the fall market, and then closing maybe in November and December, you're going to get a deal. So as we roll on into the fall, we're going to have some really good prospects coming on. Listen, I wanted to touch on this. If I'm asking you to come on the podcast, it doesn't mean that I need a deal from you, right? It doesn't mean that I'm saying, hey, I want a contract in order for you to come on my podcast. I'm just asking you to come on the podcast so we can go over what's going on in the state of the market. I've asked a lot of realtors, and I think they feel threatened because they think that they need to give me something in order to come on the show. Like, do I need to give him a deal? Is he going to pitch me to work with me? Am I going to owe him a contract after the show is over? Am I going to? No. Guys, I'm just, this is the whole reason why I did this podcast was for the state of the market. It was for, just to find out what's going on week in and week out in the city, in Jersey, whatever it may be. No strings attached. If you can't come on, you can't come on. If you can come on, great. I would love you to come on if I asked you. Because usually I ask you because I see you on social media or I see your name or I know you and I know you'd be good. And I know that a lot of people look up to you in the industry. So it's not about business. These podcasts, they call realtors on or they call people on and then they expect business from them, or they pitch them hard just to work with them because they can. That's not what this is about. I've been in this way too long to expect anything. I listen. If you want to work with me, great. I mean, that's awesome. But if you don't, it wasn't about that. I can't tell you how many people have come on from offices that I get no business from. I don't even know the realtors half of the time that come on the show before they come on the show. And I asked them very politely, do you want to come on the show? And do you want to, talk about the state of the market? And they say, yeah, that's fine. I mean, it's not a big deal. And there's no script either. All right. You just come on and you tell us about what's going on. That's all I care about. Right. That's all anybody cares about anymore. They don't care about, all this mumbo jumbo scripting stuff and, talking like a robot or whatever. Just come on. Let's talk about what's going on out there and then move on. All right. So if I'm asking you to come on, I really want you to come on. I think you're going to do good. I wanted to throw that out there because I've had a lot of people that I feel like they feel threatened or something. And it's not about threatening you. It's just about having you on. If there's topics that you think we should hit on, I want you to let me know. There's comments. Listen, we post this on YouTube. We do this on Apple Podcasts. It's posted on Instagram constantly, Facebook, LinkedIn. Give us a comment. Tell us what you want to hear. Let me know what type of topics you think we should be hitting on, because I think that the more information that these buyers and people that are refinancing get, the better. So don't forget that people are out. The information is terrible right now. Like there's what I say is financial literacy is gone. Where is the education of educating new people on how to buy a home, and where to go to buy a home, and what are the steps to buy a home? How about this education point, which I've said week in and week out? One extra payment a year knocks your mortgage from a 30-year down to a 25-year. 2 extra payments a year knock you from a 30-year down to a 20-year. Okay. Nobody seems to know that when I go to closing. Like they're like, oh, well, you're kidding me. You don't need to get a 15-year mortgage to pay off the mortgage quicker. If you go with a 15-year mortgage, the payment's going to be a lot higher. Now, you're going to get a lower interest rate if you go with a 15-year mortgage, but the payment's going to be about $300 or $400 a month higher. Versus if you go with a 30-year, payment's going to be $300 or $400 a month lower, but the interest rate may be a little bit higher because it's 30 years. But the beauty of it is, and what I tell people face to face when I go to closing is, make 1 extra payment a year, and it knocks the loan from a 30-year down to a 25-year. So let's say you want to pay it off in 20 years. Okay, fine. Make 2 extra payments a year. 2 extra payments a year knocks it from a 30-year down to a 20-year because you knock all that interest out of there. This is the education that I think is not being told enough on social media. There's too many people on social media saying, oh, well, I closed 7 million last month. Great. I closed 72 deals last quarter. Wonderful. Right? How many doctors go on social media and say, I had 16 surgeries last month and I'm the top guy in my cert? No. How many people do that? It's like, why do mortgage guys and realtors have to go on social media and say how many deals they closed last month or how many deals they closed last quarter? Why are we not educating more? If you look at my posts on social media, on Facebook and Instagram and LinkedIn, and Anthony's posts, which are excellent right now, he's getting even more traction than I'm getting, which is great because that's what I wanted for him. Because that's going to be the future of his business. Is education, not selling, right? Educating the steps that need to be done and what to look out for each and every day through the mortgage business. Look out for the scams. Look out for people telling you something that's not true. Going over the documentation that's exactly needed. Understanding that we can use Social Security and retirement income. These are big things that I think education is going to be the forefront of the new generation of loan officers and realtors going into 2025. It's no longer, I got the best rate. That's for now with refinancing. But the guys that make it through the markets, the guys that survive, are the guys that educate and tell, help people get to the end. Right. And that's the truth. And I believe that because I've just lived it over the last 3 years, because I could have been a guy that just sells rates. I could have went with companies that I make half the commission that I make now or a quarter of the commission that I make now just because I sell low rates. That's not my business. My business was always building relationships. That's why I talk to so many people and people come back to me, because my business was always educating people on, how to navigate to get to closing. How to understand the pitfalls that you'll fall into from experience that I went through. The best thing about this podcast and the thing that makes me feel the greatest about this podcast is I really tell it like it is. I'm an open book, right? And I'm even an open book with the people that come on the show. I don't hold anything back. I'm not here to sell you anything. I think that if you go to a company or somebody over the phone, you can tell from inside if they are really legit and if they're really a warm person and they want to help you versus someone who is just really out to, close the deal. And I know I keep saying this, but I think we're running into a lot of this where a lot of people are just, they need the education in order to proceed, and they're not getting it, and that's a shame. So anyway, a couple things before we go. We had a great Phillies event. I had all my past realtors that I work with, current realtors that I work with, friends and family that came. I want to thank everybody for doing that. Listen, we do that, twice a year. I do a Flyers game for my agents that I work with, and then I'm going to start doing a Phillies game again, I think, and keep that up. I think that in this business, it's good to have friends, right? It's good to know people. Stop cutting each other's throats. Let's work together, right? We're all going to run into each other. It's bad to trash people, because if you trash people, you may run into them down the road on a deal and you might need their help. Your company might go out of business and you need to go to another company. And if you go to another company and you've been trashing them or getting in fights with their loan officers or fighting with other realtors, you're never going to get any business, right? So it's good to have connections with as many people as you can have, and you'll survive them. You have events, go to events, talk to people, help people. We do a ton of co-marketing. I have agents asking me every week, can you help me co-market on this? And can you help me co-market on that? If you see our marketing, we're everywhere. You got to lend a helping hand right now to people that need it in this business. If you don't lend a helping hand, you're too many agents come to me and say, my guy won't even help me do postcards. They won't even help me put in any money for half and half, 50-50. Everything's 50-50, of course. They won't help me even do an open house. They won't come to the open house or help me, help me bring in some bagels or orange juice or whatever they bring. Like, you got to help people here, man. This is a business where we're together, and we're all in it for the same thing. It's to achieve, for someone to get into their house. And if you're not in it for that, or if you're just expecting business and not giving to, you're never going to get anything. Right? You're going to be in the same boat that you're in a year from now. You'll never move forward. So I want to leave you with that. Any other information, like I said, any topics you guys want, I'm here. I'm going to come in with some special guests coming up over the next few weeks. I hate to name their names. You know why I don't name their names? Because then on Friday, they call me and say they can't make it. Right? So and that's the truth. So I don't say anything. I jinxed myself a few times and I said, oh, this guy's coming on. And the next thing I know, they don't come on. Right. So, but I do have a lot of yeses and a lot of good people coming on. I've had a lot of good people in the past, but I keep looking at social media and I'm seeing a lot better people coming on that I think are really you're going to enjoy. People from Jersey, people from Philly, and the main line. So I'm going to keep them coming on for you. And I look to see you next week. Play this back, follow some of the tips that I had. I hope you listen, and I shall see you soon. All right. Thanks again.